Small account traders think that they need to trade credit spreads or risky leveraged ETFs. But the truth is, there's plenty of solid stocks under 20 bucks that you can sell puts on and make income. Welcome to episode number 3, where I'm walking through about a dozen tickers under 20 bucks that are great choices for traders with small accounts. These two names I'm about to review are spicy. So this is where discipline is really going to matter. First up, LUMN, ticker LUMN. Now they're pretty interesting because they basically trade on headlines and survival stories. It's a turnaround situation. The company has been selling assets, dealing with debt, and every few months the market asks the same question. Are they actually going to get through this? When the answer feels like yes, the stock pops up. When sentiment turns, it dips. Now that back and forth is exactly why there's juicy option premium. Now for selling puts, I'm not pretending this is a high growth stock. I'm just asking, at what price would I be okay owning the shares if it were to get ugly for a bit? This is a name where typically you're gonna wanna go smaller, give yourself some room, and don't force trades. You're getting paid because there's real uncertainty. Now Monday, the stock closed at $8.06. And as of this recording, it's down a little bit on the overnight market. An idea would be to sell a $7.50 put that expires this Friday. That last traded for 10 bucks. So if we calculate our rate of return, $10 divided by 750, which is the capital that you'd need to make the trade, that gives you a return of about 1.3% for the week, 4 days to be precise. Not bad. Now Monday, the stock closed down about 5%. And when stocks trade down, that's the best time to sell a put because you're making more premium. Like I said, just be cautious with your position size and make sure if you do trade this ticker, you keep cash on the side to sell another put if it comes down and ultimately average your cost basis down. Now let's talk about the second stock, TLRY. TLRY. I was trading this ticker a bunch of years ago as marijuana was becoming legal. Now TLRY moves super fast on anything related to cannabis reform or legislation or even rumors about cannabis. When the sector gets hot, it can rip super fast. And that's also why options stay super active. There's always speculation baked in, and speculation equals premium. Now this is not a stock that you sell puts on blindly. You have to be honest with yourself. Would you be okay owning 100 shares if the hype fades again? If the answer is yes, at a certain price, then selling puts can make sense. If not, you skip it. Now TLRY closed Monday at $10.93, down about 10% on the day. But it did gap up pretty nicely a couple of days ago. The premium is super juicy because the implied volatility is over 200%. For example, you can sell a $10.50 put and that last traded at 94 bucks. That puts your rate of return at almost 9% for 4 days. Astronomical. You can even go super conservative and sell, for example, a $9 put expiring this Friday, and that closed at 30 bucks. 30 bucks in premium divided by 900 in capital to make the trade. That gives you a 3.3% rate of return, again, for a 4-day hold. Now, both these tickers, LUMN and TLRY, are headline driven. That's the opportunity and the risk. You have to ask yourself, is this a ticker that you'd be okay buying at that particular strike price? When you size small and give yourself some room, these tickers can work really well for you. Of course, that's not a recommendation because this video is just for education. Anyway, that wraps up this episode. Be sure to subscribe so you don't miss tomorrow's episode on the next 2 tickers I'm going to walk through that are also under 20 bucks per share. If this video helps, smash the like button, share it with a friend, and drop a comment below and let me know what your favorite trade is. Thanks for watching.